Welcome to TradeTheNBA.com. This is John. This report is for the 13th of January here. We starting off the week, well, right where we expect to be. We do see a slight increase of short activity, but short-term buyers eating that alive, and the resurgence of the shakeout after having taken overbought and removed it, which a lot of indicators won't show. In fact, I think we can do a comparison in the coming week of some of the other ones, and why that's so important to see that on the shakeout, to know that within our regular DOC readings that give us the active pulse, this gives you the clear understanding that we're not in an overbought situation at all. Now, that may turn into an overbought situation if we end up with here starting to peak out with a lower shakeout at higher highs. Then we would know that the gas is out of the tank, so to speak. NASDAQ looking identical, but a bit stronger from a, both shakeout, because we never even went to the negative side of it, as well as the stronger short-term buyers really popped in much earlier, and that really led to the impetus, and it's kind of pulled the S&P with it. So Euro flatlining for the most part, and that's just because it is on a reset and has the potential to make a pop here, but there's still a lot of conflicts going on, and at least we did get the resolution to the positive extremes on the previous dip, so that kind of clarified things nicely there. And looking at oil, still basing there, it's just, come back a little bit from the nice move, and that's just because tensions eased off. A lot of this was the potential hype of, what could go wrong, and gold slightly popping up simply because of growth issues and the potential for inflation. Throw in that political mix, and you still have people wanting to stay on the sidelines because there's still more missiles being sent over, blah, blah, blah. It just doesn't seem to be creating any shockwave, so to speak. From an intraday standpoint, we had some beautiful setups here. Green came through. DOC spread, of course, with the reset of the steel. Once it comes back above, you kind of expect a little bit of a pop. And so even if that created a little head fake with the green, as soon as it flipped and turned around, it was a signal to go back to the short side, and then boom, turnaround pop with the green coming back over. Led to a nice little one until we ended up with the clean steel going below cyan, green below red, and the shakeout already in the weakness. And even though that held on for a few more bars, even if you caught the second version of it, it was right around the same spot. Close on this one, 79 and a quarter versus 79.50. I mean, within a tick, and you didn't have any of that little upspurt that took place, or even if you did, it was an opportunity to realize that it was going to stay that way, and it did, and gave a nice breakdown, filled in the dip below the red lines from over here, and continued a little bit of a follow through, which also created an additional one, which meant you knew that this low was going to be retested again. Doesn't mean you can't have a pop within that. And sure enough, we caught it just over the 23% here as the green. Even a bar earlier above the 23 was kind of clear that this one was going to do it. No reset of the steel, meaning it's not going to be sustainable. And of course it wasn't. Hit the 50%, fluctuated for a little bit. You might even have been tempted right at this particular spot with the green, red slightly rolling over. When I said green below red, DOC right there. And the only difference is you just had the shakeout move below the yellow. So, I mean, all those things I would be probably jumping on that early just to add in if I had a significant enough position. And then the clarity really came on that breakdown here, the green right here, and then boom. But it's a significant difference, because if you take into account the crossover as it takes place, right there was just slightly above it, 314. It was this bar right here. So the difference between 75 and 73.50 is just a couple of extra points. But hey, that you don't know all the time that you're going to get follow through below the low. But the risk to reward ratio, you know exactly what that is, because you're looking at it from the standpoint of the expectation of the low being revisited. So from 73 to 68, you're thinking, okay, I got at least 5 points locked into this baby. And not only was it, the 5 points, it just kept going. There was no, and that's because there's no reset. and it makes it helpful to see that. It can be overcome when you get that green going above. In this particular case, kind of shock faked lower and then turned around right at the end of the day, pre-market, but you had no new dip that needed to be filled, and that's always a little warning. And then I look for the P2 pivots, and of course that came immediately right after aftermarket. We'd already seen some improvement right there, and just had the positive extreme that it needed to fill. It did that, and then boom, it was ready for the post-market, and it just puts us right back in the median range of where we were from the close going back over here. So all in all, really good action, very clean, easy to see, and it's really getting strong. We're getting closer and closer with the exact pivots for the color bars and everything. So really excited about all that development. Oh, we might as well take a look at the 50K, because I know the Momo trade was going pretty good there. We had the 28.25 entry, and it closed it out at 71. So, you can't complain about a nice little 40 points to begin things. I think even the daily, Iron Hawk is still in it because it started later. It was at the 60. So it has a little bit more to push up to get there. As always, though, anything unique and relevant, I will certainly put up on the Skype chat. As always, trade well.